Okay, let's just dive right in. For years, there's been this huge debate, right? Is Bitcoin the new gold? Is this revolutionary tech actually going to unseat the 5,000-year-old champion of, keeping your wealth safe? I love this analogy, drawn from the ancient Punic Wars. It just perfectly captures the whole drama. You've got the daring revolutionary upstart, Carthage, going up against the time-tested dominant empire, Rome. But as anyone who knows their history will tell you, it's always a big mistake to bet on the underdog without remembering how that story actually ended. So today, we're going to really deconstruct that popular story. We're going to move past all the hype, all the headlines, and use the wild events of 2025 as our ultimate reality check. We're going to see how these two assets really behaved when things got tough. Look, 2025 wasn't just another year on the calendar. It was a massive stress test for that whole digital gold theory. And it created this huge divergence, telling two completely different stories about risk and about what investors truly want in a crisis. So first, let's look at the incumbent, gold. It absolutely surged, finishing the year up nearly 65%. It did exactly what you'd expect from a classic crisis insurance policy. When uncertainty spiked, demand for gold was steady and strong. But then you look at Bitcoin, the supposed challenger, the digital gold, and it finished the year with a loss. I mean, despite a year of incredible volatility and grabbing all the headlines, its performance told a totally different story. Now, the story here isn't just about that final number on the board. Look at the range. Yeah, Bitcoin had a spectacular high, over 126 grand, but it also had this staggering 65.5% swing from its low point. That's just extreme volatility. Gold, on the other hand, showed this steady, sustained momentum. It really highlights the huge difference between a fleeting speculative peak and what true safe haven performance actually looks like. So, the big question is why? Why did this dramatic split happen? Believe me, this was not random. This divergence was driven by fundamentally different mechanics. So let's pop the hood and take a look. Gold's amazing run was backed by massive structural demand from central banks. They bought a staggering 863 tons in 2025 alone. They weren't speculating, they were diversifying. Bitcoin, meanwhile, it behaved exactly like a high-growth tech stock. Its correlation with the S&P 500 hit 0.86. That means when the stock market sold off, investors treated Bitcoin the exact same way. They sold it to get rid of risk. And this really gets to the heart of what defines Bitcoin. While gold is known for stability, Bitcoin is defined by just intense volatility. These huge daily swings are precisely why it tends to get sold off with other risky assets when panic hits, instead of acting like a port in the storm. But, what the market was doing wasn't the only story in 2025. Over in Washington, regulators were busy writing a brand new chapter. The first major piece of U.S. crypto legislation was passed, and it really started to change the rules for the entire digital asset world. So after years and years of debate, the Genius Act flew through Congress in just 2 months. Think about that. This bipartisan bill, which focused specifically on stablecoins, was introduced in May and was signed into law by July. That marked a whole new era of regulatory clarity and, well, scrutiny. The main goal of the act is pretty simple: make stablecoins safer and more transparent. It's basically trying to force them to act more like a regulated payment system, kind of like PayPal or Venmo. It demands a one-to-one backing with high-quality reserves, but it also carves out this unique space for them, separate from traditional banking and securities law. But hey, not everyone was convinced. While analysts pointed out that it created a new, clearer regulatory path away from the SEC and the CFTC, consumer advocates were raising some serious alarms. They argued that without FDIC-style insurance or clear rules for getting stolen funds back, users were just being left vulnerable. Okay, so after all the market drama and the big regulatory shifts of 2025, what's the big takeaway here? Well, the data really points to a clear conclusion. These things aren't competitors. Instead, we need a practical way to think about their very, very different jobs. Think of gold as the ballast in a ship, right? It's that heavy, stabilizing weight deep down in the hull. It's not there to make the ship faster, but it's absolutely essential for keeping you steady and upright when the economic seas get really rough. Bitcoin, on the other hand, is more like a powerful, high-tech sail. It can generate incredible speed and huge gains, what investors call asymmetric upside. But, and this is a big but, it's extremely sensitive to sudden shifts in the wind. It can get totally torn apart in a storm if you rely on it too much. So this suggests that maybe a barbell strategy is the most sensible way to go. You anchor your portfolio with the stability of gold on one end, and then you add a small, carefully managed amount of Bitcoin on the other for that explosive growth potential. It's about using both tools for their unique strengths, not asking one to do the other's job. So the takeaway from 2025 is crystal clear. The whole digital gold story was put to the test, and frankly, it broke. The market showed us, loud and clear, that these are not competing versions of the same thing. They are different tools for entirely different jobs. The events of 2025 really settled that debate. So the big question for the future isn't about which asset is going to win. It's about how wisely investors are going to use these two very different tools to navigate the economic storms that we all know are waiting just over the horizon.